Is the future of cryptocurrency in jeopardy? With regulators tightening their grip and targeting major players like Binance and Coinbase, the digital currency revolution stands at a crossroads. Will these crackdowns cripple innovation, or could they pave the way for crypto to truly go mainstream? The answers might change everything. Stay tuned. The debate over cryptocurrency regulation has reached a boiling point in the United States, with the Securities and Exchange Commission taking center stage. In recent months, the SEC has filed lawsuits against major crypto players like Binance and Coinbase, accusing them of operating outside the bounds of US laws. Binance, the world's largest cryptocurrency exchange, is being accused of mixing customer funds and secretly sending billions of dollars to an entity controlled by its CEO, Changpeng Zhao. Meanwhile, Coinbase faces allegations of trading crypto assets that the SEC claims should be classified as securities. These legal battles have raised a critical question. Is this an overdue effort to bring order to a chaotic market? Or is it an overreach that could stifle innovation and push the industry away from US shores? The crypto world's regulatory changes are not new, but they have intensified in the wake of high-profile collapses like FTX. When billions of dollars in investor funds disappeared seemingly overnight, it became clear that some level of oversight was necessary. However, the manner in which this oversight is being implemented has sparked heated debates. Binance, for example, allegedly allowed high-value US customers to trade on its global platform, despite publicly claiming to block them. This and other allegations against major exchanges highlight a lack of clarity in the regulatory framework, leaving even the biggest players in the industry grappling with compliances. Adding to the complexity, these actions have sparked fears of overregulation, potentially stifling innovation and driving businesses away from US markets. Critics argue that enforcement without collaboration creates confusion rather than clarity. Startups and investors alike are left in a precarious position, unsure of how to navigate this shifting legal landscape. Meanwhile, other countries with more favorable rules are stepping up to attract the crypto talent fleeing the US. The result is a global race to define the future of digital currencies. A key issue lies in the fundamental disagreement over how cryptocurrencies should be categorized. Should they be treated as securities, like stocks and bonds which fall under the SEC jurisdiction? Or are they commodities like gold or oil, which are overseen by the Commodity Futures Trading Commission? The answer has massive implications for the entire industry. If tokens like Bitcoin and Ethereum are classified as securities, exchanges will face stricter rules and higher compliance costs. This could discourage innovation and make it harder for smaller startups to thrive. On the other hand, clear regulations could bring much-needed legitimacy to the market, attracting more institutional investors and boosting mainstream adoption. The legal battles have also brought to light some striking contradictions. Ripple Labs, the creator of XRP, won a partial victory in court when it was ruled that distributing their token as employee compensation didn't qualify as a securities transaction. This decision has given hope to other crypto companies, but it also underscores the lack of consistency in how these cases are being judged. The uncertainty has created a minefield for businesses trying to navigate the rules, with many opting to relocate to countries with more favorable regulatory environments. This migration highlights a growing divide between the US and more crypto-friendly nations like Switzerland and Singapore. Such regulatory inconsistencies not only deter innovation, but also risk ceding leadership in blockchain technology to foreign markets. For startups and investors, the stakes are higher than ever, as even minor missteps can result in hefty penalties or legal challenges. Despite these challenges, the cryptocurrency market is still attracting significant interest from institutional investors. In 2024, Bitcoin ETFs approved by the SEC have already seen billions of dollars in trading volume. BlackRock, the world's largest asset manager, launched a Bitcoin ETF that quickly became its third largest product. Traditional financial institutions like Morgan Stanley and America are also exploring opportunities in the crypto space. This influx of institutional money is a double-edged sword. On one hand, it brings stability and credibility to the market. On the other, it raises questions about whether the original ethos of decentralization is being lost. Can institutional involvement truly coexist with the decentralized ideals that sparked the crypto revolution? Or will it reshape the industry into something unrecognizable? Institutional investors aren't jumping into crypto because they see it as the future of finance. It's just another way to diversify their portfolio and boost returns. This practical mindset couldn't be further from the original ideals behind cryptocurrencies like Bitcoin, which were all about decentralization and resisting censorship. Now, with Wall Street playing a bigger role in the crypto space, some are concerned that the core principles that made cryptocurrencies unique might start to fade away. Could this shift signals the end of crypto's rebellious decentralized roots? Or is it simply a sign of the industry maturing? And if the ethos of decentralization fades, what will the future of crypto truly look like? One prominent figure in this debate is Elon Musk, who has made waves in the crypto world with his tweets about Bitcoin and Dogecoin. Musk has even suggested creating a Department of Government Efficiency, cheekily nicknamed Doge, to streamline bureaucratic red tape. His idea resonates with many in the tech and crypto industries, who see over-regulations as a major obstacle to innovation. Supporters of Musk's vision argue that his hands-on understanding of government inefficiencies could make a real difference in shaping more practical regulations for emerging technologies. They believe his track record of tackling red tape in industries like space exploration and electric vehicles shows his ability to push for streamlined processes without stifling growth. However, there is a fine line between fostering innovation and ensuring consumer protection. Regulations exist for a reason, to prevent fraud and other illicit activities. But overly strict rules could push the industry underground or drive it overseas. Finding the right balance is crucial, and it's a challenge that regulators and industry leaders must tackle together. The SEC's approach has been criticized for its lack of collaboration with the crypto industry. Instead of working with innovators to create workable rules, the agency has opted for enforcement actions. Internal messages from Binance executives, including one that referred to their platform as an unlicensed securities exchange, have only added fuel to the fire. These statements may strengthen the SEC's case, but they also highlight the frustration and confusion within the industry, even if major players can't figure out how to comply. What hope is there for smaller startups? As the legal battle unfolds, the future of the crypto industry hangs in the balance. A victory for the SEC could lead to stricter compliance requirements and higher costs for businesses, potentially stifling innovation. On the other hand, if the court rules against the SEC, it could force the US to rethink its entire regulatory approach. The outcome will have far-reaching implications, not just for the US but for the global crypto market. The uncertainty in the US regulatory landscape has created opportunities for other countries to step in. Dubai, for example, has established itself as a crypto-friendly hub with clear rules and incentives for businesses. El Salvador has gone a step further by adopting Bitcoin as legal tender, a move that has attracted both praise and criticism. These countries are capitalizing on America's regulatory hesitancy, drawing talent and investment away from traditional financial centers. The debate over crypto regulation also raises broader questions about the role of government in innovation. How much oversight is too much? Can regulators strike a balance between protecting consumers and fostering growth? These are questions with no easy answers, but they are critical for the future of the industry. Cryptocurrency represents a new frontier in finance. It comes with risk and reward. The challenge for regulators is to create a framework that minimizes the risks without stifling the rewards. For the crypto community, the challenge is to adapt to these rules while staying true to the principles that make the technology revolutionary. What's your take on crypto's future in the US? Will regulation bring clarity or chaos? Share your thoughts in the comments, and don't forget to like, share and subscribe for more insights into the world of crypto and tech.